All right. Before we get into rates, right, we're going to start with the fun. We're going to start in with basically how to win some money. So let's get going right here. The chance to win. Now, the rules for people out there, if you want your chance to win, all you got to do is text the numbers below, one or both the numbers below, with your answer. No cost to play, but is your chance to win. Okay, so here was the question for last week.
But you could be charged for your text message if you don't have a good service provider. Full disclosure.
That is definitely true. Okay, how much of the most expensive detached property sell in La Jolla so far this year? What is your guess, David?
What was mine?
Yeah.
27 million.
It was 21 million.
Damn, I was going to go with 22 initially. God,
well, close. Okay, well, here is the question for this week, though. How much of the least expensive detached properties sell in Mira Mesa so far this year?
Well, Mira Mesa is an interesting environment because it goes up and down so much throughout Mira Mesa. But Mira Mesa does have really good Filipino food, for the record. And my favorite one that I go to is Manila Sunset, which is on Mira Mesa Boulevard. And this is not a paid advertisement, but I was there over the weekend and it was delicious.
Was it? Were you a smooth operator when you were there?
Yes, I was incredibly smooth. In fact, my order went through so smooth, they paid me to eat the food.
Wow. All right. So, what's your guess, Mr. Smooth Operator?
Ooh, least expensive in Mira Mesa. I'm gonna go with 250.
All right. This is detached.
Yeah, I mean, because there's some really rough areas of Mira Mesa that have no value and could be utterly destroyed. 250, 300, I think.
So
I'm gonna go 300. I'm gonna go.
That is David's guess right there. Mira Mesa for 300. What is your guess? Text for your chance to win. All right. While David's talking about interest rates and everything like that, I'm going to be switching a little bit later into what's going on with the market. But let's talk about interest rates. How are interest rates looking?
Boom. People, we're back to, let's go back to an old, terrible song. I got 5 on it, which was a terrible old rap song. But I say I got 5 on it because interest rates are back down to 5%. Boom. If you've been watching our show a month ago, we were at 6%. So the more you keep hearing the message that the Fed's raising rates and all the media is giving you all the wrong information, we're coming back full circle. Every time the Fed raises its federal funds rate, the bond market likes it because it's attacking inflation, which pushes the long-term cost of borrowing in bonds down, which makes mortgage rates better. So for all of you out there that thought we were going to HELL in a handbasket with all these rate hikes, no. These rate hikes are actually helping mortgage rates. And if the Fed does another 50 basis points in September, which is probably pretty likely because last week inflation came out much higher than anticipated, then we're actually going to be helping mortgage rates down. And that's going to be really good. If we get back down to 4.75 in September, I think, 4.75 at no cost. And I'm not talking about the old lender bait and switch, charge you a whole bunch of points and don't tell you to the last minute. I'm talking about real 4.75 or maybe even 4.5 at no cost would be phenomenal for the market.
Well, something interesting, right? Because this could be a perfect storm for a lot of you that maybe didn't buy a couple months back, right? Median sales price. Okay, remember median sales price takes all the numbers and takes the middle number. All right, now the median sales price is going down. It's a little above 800. So you're talking about 815 for across the board median sales price. Now, median detached price is still going down. All right, not that $1 million that it was a little while back. All right, it's in the high 9s. And you see median attached price is also going down. Now, something that's happening too, right, is the list is sold. Now, if you've watched, I know I said that, okay, we were at 106. Last month we were at 101. I really thought we were going to get down to the 90s, the high 98, 99, somewhere in that ballpark. Oh, we're not there, but we are at the 100. 100 lists is sold. Okay, that's median 100 lists is sold. And then for detached, same thing, 100. All right, so for the most part, what people are asking for, they're getting. Yet there are outliers out there where it's still happy people are going under asking. So be aware that rates are going down a little bit. like Dave was talking about, and maybe a little more wiggle room when you're putting offers out there. So food for thought when you're out there looking to purchase. And active properties, nothing drastic has changed for the last week or so. We're still about the same amount of active properties that we were a little while back. So a lot of positives in this one. I mean, for the last couple of months, it was a lot of negatives, but today a lot of positives. Let's talk. Is there any kind of things that people should be aware of going on this week, David?
You know what? So this week, I'm glad you brought that back. You circled right back. Is Thursday and Friday are big this week. Thursday and Friday. Thursday is continuing jobless claims, which is actually a great number to go. How many people are having problems with work? And then Friday, we actually have unemployment rate. So for those of you who want to look at a historical aspect and go, even though we've already had 2 consecutive quarters of negative GDP growth, which is historically considered a recession, the media is telling us it's not a recession because we changed the whole dynamic of it. But when unemployment reaches its lowest point and then starts to gradually tick upwards, is another signal of a furthering, deepening recession coming. So it'll be interesting to see because we already hit our low point of unemployment. Like almost everyone's back to work for those people that actually want to work. So if the rate starts ticking up now, it's another historical factor for the last 100 years saying a recession is going to come and be a little deeper. So we'll see. So it'll be interesting numbers. It's also going to be interesting when the next quarter comes out if we have negative GDP for a third quarter in a row, and then see what we call it.
Yeah, a lot of unknowns. I mean, again, for people that are saying they know what's going to happen with the future economy, future market. I mean, someone's going to be right, someone's going to be wrong. All we know is rates have trickled down a little bit. The market has softened a little bit. So if you're looking to purchase, really give us a call, myself or David. There's a clicker below. Give us a call. And I mean, just find out what's possible. And if you watch us on last market updates, you've seen that there is flexibility too in down payment assistance, buying down the rate. So just reach out because you don't know what's possible until you reach out. Thank you guys for watching. Try to keep this short and sweet.
Wait. Let's before we jump out, let's say, Vinnie, the whole time me and you've been doing this, we've always said the only thing constant is change. And for those of you out there who are going, oh, the market is hemorrhaging and all these prices are being reduced, the prices were overpriced before a lot. So now if you have, we've had 19% appreciation, 20% appreciation year over year. So now if we go down to 6%, which is actually really good, people are going to say the market's collapsing. It's not collapsing. It's just, it's going to get less appreciation as fast as it was. And that's a benefit. So people should be happy what's going on with the prices. I just want to put that out there because some people are going, oh my God, there's a price reduction. See, everything's melting down. When home prices go up 20% in a year, that's a problem.
Well, and if people are freaking out, that gives opportunities, right?
Sure.
You don't want to take advantage of people that are freaking out, but you have to really know what's going on with the market so you don't freak out. Thank you guys. Please subscribe, please share, reach out with any sort of questions you might have.